Hi, I'm Kep Kepner, CPA here in Dallas. One tax strategy that works for business owners is to take something that is personal that you would have anyway and convert part of that to business use so you can deduct it. An example would be a cell phone or your automobile. When it comes to your car, there are a couple of ways to calculate your costs, but in either case it's going to be the business percentage. Most people find it easier to use a mileage rate. And so when they go to the gas station, they look and they see, wow, the price of gas is down to $1.80 or $2. It's been $3. Man, that's like money in the pocket. Now, Uncle Sam is not immune to understand that also. So instead of having a mileage rate of 55.5 cents, for 2016, the mileage rate goes down to 54%. If you think about 54 cents a mile, blah, 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 so maybe you can cut in here. So Uncle Sam takes note of this also. What the IRS has done is lower the mileage rate for 2016 to 54 cents a mile. So if you drive a business mile, you can deduct 54 cents for that. Now think about it. What's happened with our automobiles in the last 20 or 30 years? They're much more expensive. They have a lot of technology. Their basic maintenance doesn't really cost that much. And they have higher gas mileage for many of the vehicles. So you think about that, how does that affect Uncle Sam? Well, number one, you're going to have a much higher part of your cost of your vehicle tied up in depreciation and a lower part in gasoline and in repairs. You're also going to have higher insurance costs because you have a more expensive vehicle in case there's an accident. So the mileage rate that you use takes all these things into account. And if you think 54 cents a mile is an okay deal, get to deduct 54 cents, let me assure you, don't kid yourself. It costs you 54 cents a mile to drive that car. When you take into account depreciation, you take into account repairs, gas and oil, licenses, maintenance, insurance, all of that, it's going to cost you 54 cents a mile. So you think you're getting a bargain. Well, maybe you are because you get to deduct it as one of your business expenses. But the reality is it's not a big, giant savings for you. If you end up at the end of 10 years and you've driven your car another 100,000 miles, then you're going to pay for it because the car's not worth as much. If you drive modestly, didn't have any business use of it, you might drive that car for a longer time. So think about it. Uncle Sam isn't dumb when it comes to cars. They know how the game is played. And the game is played to allow you to deduct the cost of driving as it relates to your business. And if you use the mileage rate of 54 cents in 2016, that's what it cost you. If you decide to use your actual expenses, you have to multiply that times the business expenses, business percentage of your miles. So you need to keep good records on that. Many people decide just to keep the mileage because it's too much trouble to keep track of the actual expenses. And the reality is there's not a whole lot of difference between the two, because let's not kid ourselves. The IRS has 50 statisticians up there calculating everything to do with the cost of driving a car, and we get the result of that. So use your car wisely. If we can help you, give us a call.